Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Markets on tenterhooks as traders await inflation prints from both sides of the pond. US CPI expected to remain firm, while the UK outlook has investors on edge. South Korea's Yoon Suk-yeol is arrested over the martial law fiasco, the first incumbent to be taken into custody in the nation's history. Plus, the SEC's parting shot at Elon Musk as the regulator sues the world's richest man over an alleged failure to disclose his Twitter stake ahead of that takeover. So it is about the data today, primarily in focus for investors, with the US inflation print out later today. And of course, before that, 7 a.m. UK time, it is UK CPI after the rout across UK assets that we've seen and the concern about the debt load of the UK and sticky inflation. European futures pointing higher by 0.1% after ending essentially flat yesterday. FTSE 100 futures here in the UK looking to gain around 0.2%. S&P futures stateside currently flat, bit of a holding pattern there, it seems. A mixed close for US markets yesterday, with the Nasdaq 100 down by the end of the close and the S&P just eking out a slim gain. Nasdaq 100 futures now pointing to gains of 0.1%. Let's flip the board and look cross-asset. Of course, the focus will be on the pound, but also US Treasuries, given the inflation data out later today. The 10-year currently yielding 4.77. The pound at 1.21. Softer again in the session, down 0.1%. The inflation data, of course, could adjust the prospects for sterling. Brent, $80 a barrel, just up 0.4%, and gold at 2,679. The yellow metal up 0.1%. Let's flip the board and have a look at Asia. The lines coming out in the last half an hour or so around additional restrictions from the Biden administration on the sale of AI chips into the Chinese market, specifically focused on the likes of TSMC and Samsung, the owners, of course, of the fabs that manufacture those chips. MSCI Asia Pacific across the benchmark currently flat. The Kospi over in Korea on the arrest of the president currently flat as well at 2,497. The yen, I should say, currently up 0.4%. We've been hearing from Governor Ueda hinting, suggesting that certainly the decision next week from the Bank of Japan is in play. He hinted at and talked of higher wages. So that suggests that maybe there is an option for the BOJ still to go with another hike. Markets expecting about a 68% chance now. That is the odds of a BOJ hike at that meeting next week. So the yen is strengthening. The Taiwanese semiconductor manufacturer TSMC in focus, of course, on the back of those rules coming through from the Biden administration, currently down 2.3% in the session. Now, economists in Bloomberg survey are expecting US consumer prices to show a fifth month of firm increases. Today's CPI print likely to reinforce the case for an extended pause in Fed rate cuts. That, at least, is the expectation. Let's bring in Bloomberg's Valerie Teitel on the key components worth scrutinising in the report. Valerie, where will your lens be?
Oh, it's going to be on that core month-on-month CPI print, expected to hit 0.3 for a fifth month in a row, Tom. But if we look at what's priced in to the options market, the market's attention has squarely returned back to inflation. This is the biggest CPI print that we have seen in nearly 2 years. The implied swing in the S&P 500 for today's print is a plus or minus 1%. This is a high-stakes print, both for what we can see happen in the Treasury market. A hot print could really tempt us to believe that the Fed's next move could be a hike and that bond route could continue. We saw those 30-year yields touch 5% for the second time this week. A hot CPI print today could get the market to start thinking that those 10-year yields are headed north of 5% as well. But back to the core month-on-month CPI print, Tom, because this is going to be the most important component of the print today. It has printed at 0.3 for the last 4 months running, and that's important because a 0.3 month-on-month reading gets us farther away from the Fed's 2% target. That is why we don't want to be seeing these 0.3 month-on-month readings. We really want to get back to 0.2s and 0.1s. We've not had that in the last 4 months. months. Again, the pressure is on not just for the Treasury market, but for markets globally if this bond rout is ignited by a hot print in today's CPI reading.
OK, so focus on the core. Currently 4.77 being yielded on the US benchmark 10-year, with yields down just over 1 basis point. And we'll see how much volatility there is around the 10-year on the back of that inflation print. Again, Valerie Teitel saying that the core is certainly in focus in terms of the outlook for inflation as well and expectations for the Fed. Inflation, of course, concerns in the UK have been a central catalyst for the sell-off that we've seen across UK assets in the last week or so. The UK Chancellor has blamed the recent spike in UK borrowing costs, meanwhile, on global market volatility. Rachel Reeves sought to deflect questions on how she will repair Britain's fiscal position as she faced Parliament for the first time since the market sell-off.
I set out the fiscal rules of this government at the budget in October, that we will pay for day-to-day spending through tax receipts and that we will get debt down as a share of the economy. We remain committed to those fiscal rules and we will meet them at all times.
OK, our UK correspondent Lizzie Burden joins me around the desk. So Lizzie, Rachel Reeves trying to assuage the markets, trying to calm the markets. Did it work?
Well, the real test is going to come today, Tom. You heard her there reiterating that she's going to meet her fiscal rules at all times. Another test will come in March when the Office for Budget Responsibility assesses if she's got any headroom. She has signalled to us that if she hasn't, she'll pick spending cuts over tax rises rather than breaking those fiscal rules, although notably she didn't say that herself yesterday in public. But it raises the question of if she's going to cut spending, how is she going to do that and maintain credibility? Is she going to say that she'll do it down the line, let's say after 3 years? And will that actually be enough for the market? We were speaking to the former Chancellor George Osborne's ex-advisor, Rupert Harrison, on the opening trade yesterday, and he said that, look, if she did that, it would be a stroke of the pen, as he put it. It would be changing some numbers on a page, not real action. But this wasn't the only drama that was happening at the Treasury yesterday, Tom. You saw the City Minister, Tulip Siddiq, quit. She also had responsibility for anti-corruption. Ironically, it was over a corruption probe. But she was a close ally of the Prime Minister, so interesting to think about his position, slightly weakened now, perhaps. Also, interesting that she's been replaced as City Minister by Emma Reynolds, who is now working on China policy as the government tries to strengthen ties with Beijing, opportunities for the financial sector. And she used to be part of a city lobbying campaign to keep China out of the enhanced tier of the foreign influence registration scheme. So the controversy could still continue at the Treasury. OK,
take us to the macro picture on the data front then, the preview. This is what is key today, as you said. It's the inflation data out of the UK, 7 a.m. UK time, and whether it exacerbates the sell-off or gives the Chancellor some reprieve.
Exactly. The market moves, meaning that the spotlight really on this data. Economists expect inflation to have stayed at 2.6% at the headline level in December, so above the Bank of England's 2% target, again the highest in 9 months, fuelled perhaps by energy prices. And it's tricky for the Bank of England, Tom, because on the one hand, the BOE could focus on the near term and be very cautious about cutting rates. On the other hand, they could look through what may be a temporary rise in inflation, focus on the weak growth outlook. But then there's the question, is this actually temporary? And we had a survey from the British Retail Consortium showing that 2/3 of CFOs plan to pass on this NICS rise, the payroll tax rise introduced in the October budget, onto consumers. Food prices expected to rise 3.5% this year compared to 2.9% in 2024. But arguably what matters most to the Bank of England is the services number. So for now, traders have pared their bets on BOE cuts. In December, Bank of England Governor Andrew Bailey had said that there'd be 4 this year. At the moment, they're only fully pricing 1.5 total. And of course, as you say, it comes back to the Chancellor too, because if you get a shock inflation spike today, you could see gilt yields rise, and that would further wipe out Rachel Reeves' headroom.
On the BOE then, you talk about expectations from markets that maybe they only go once this year, possibly only once. I mean, to what extent is that consensus? What are you hearing from economists in terms of what would trigger a more dovish Bank of England, and whether or not there is even a debate happening around QT and whether they start to fade that?
Well, because the QT situation feeds in as well into the gilt yield situation for Rachel Reeves, and this question of whether the Bank of England needs to be stepping in with the market turmoil. You could look at the moves yesterday and think that actually maybe Reeves has made it out of the turmoil, and it was right of her to go to Beijing and stay calm here. You heard from the Bank of England's Deputy Governor Sarah Breeden saying that the moves were orderly, echoing Reeves' deputy, Darren Jones. There has been the argument made that this isn't the same sort of crisis as there was under Liz Truss. It isn't an LDI crisis. But to what extent is the quantitative tightening, the gilt sales programme of the Bank of England interfering with this? You have had certain economists like, as you say, Vicky Price, one of them, saying that maybe there should be a role for the Bank of England to change what it's doing so that this turmoil is lessened.
And just briefly, before we let you go, you touched on some of the political pressure that the economics is leaving now, the scarring on this Labour government. How weakened is Keir Starmer at this point, realistically? He's got that majority. Someone described it as a super majority. Is this a more fragile UK Prime Minister after last week's events?
Boris Johnson had a landslide majority as well in 2019, so just because that majority exists doesn't mean that that power will always be there. This doom and gloom narrative from Labour has had an impact. You can see it there in terms of this British Retail Consortium survey, the tax hikes, the narrative weighing on confidence among businesses. But the market turmoil, guest after guest has said to us, is also an international picture.
Lizzie.
Which is why we need to be nuanced about the extent to which the Chancellor is weakened.
Lizzie Burton, UK correspondent, thank you very much indeed. We're going to preview live pictures right now of a SpaceX launch that is expected in the next couple of seconds. You can see the Kennedy Space Center there in Florida, and there is the launch. Let's listen in.
Vehicles pitching downrange.
Plus 30 seconds into launch, Falcon 9 has successfully lifted off from Launch Complex 39A at Kennedy Space Center. Now the vehicle is going vertically, but it will begin to move horizontally. We're going to gimbal those.
Falcon 9 power and telemetry are nominal.
We're going to gimbal those engines. We're still going up, but now
engine pressure is nominal.
Now
vehicle is supersonic.
We'll be moving horizontally, and that helps the vehicle get into orbit and avoid being pulled back down to Earth. Now we are coming up on max Q. This is the largest structural load that the vehicle will see during ascent.
Max Q.
There's that call out. We've passed through max Q. Now we do have a few events coming up in quick succession. That'll be MECO, stage separation, and SES-1. MECO is main engine cutoff, and that's where
a SpaceX Falcon 9 rocket launching a pair of lunar landers, which will begin independent journeys to the moon. They have a payload of scientific equipment. The primary payload is called the Firefly Aerospace's Blue Ghost lunar lander. They're going to be carrying 10 science payloads from NASA as part of the Commercial Lunar Payload Services program. It's been called Ghost Riders in the Sky, this mission, and it has a target of landing on the moon in early March. So we were seeing live pictures there of the SpaceX Falcon 9 rocket taking off from Kennedy Space Center with a payload that will be landing on the moon, expected in March, with scientific equipment feeding data back, of course, to NASA and the team. Coming up.
I heard Bloomberg is looking for a new co-host for Daybreak Europe to explain the benefits of AI to business leaders worldwide. So then I thought, no one is better qualified than me, an AI-generated avatar.
We are going to be speaking to the CEO of Synthesia to discuss the company's growth ambitions and the development of their digital avatars. They've raised another $180 million. That exclusive conversation is next. This is Bloomberg.
Hi, I'm Victor Riparbelli, CEO of Synthesia. I'm excited to share that we've just raised $180 million from leading investors to accelerate our mission of bringing the magic of video to business. This milestone reflects the trust of our customers. Today, thousands of companies, big and small, including over 60%.
NVIDIA-backed startup Synthesia is now valued at $2.1 billion. The latest Series D funding will support the company's next phase of growth to cement it as a pioneer in generative AI for enterprise video. Very pleased to say, joining me now for an exclusive interview, the CEO and co-founder of Synthesia, Victor Riparbelli, you can see in the video there. Victor, thanks for coming to the studio. Friend of the show, you're based here in London, you and the team, and we saw your avatar there, not filmed on cameras. That is your avatar, arms moving, legs moving, the facial expression. So that is the development we've seen with your avatars since the last time we had you on. You've raised $180 million. How are you deploying that capital?
For us, it's doing more of what we're already doing. It's clearly working. Very grateful for the partnership we have with our customers. And what they tell us that there's still some way to go on the AI videos, making the avatars even more lifelike, even better. Some of the things we're looking at this year is having avatars that can pick up an object and talk about it, have conversations like we're doing right now. And so there's a big investment going in there. That's both talent, it's increased compute, it's all the things you'd expect from an AI company. We're also investing more in our core platform. We're bringing some new video experiences to life this year. So most people think of video as being broadcast like we're doing right now. Mm-hmm. It's a linear beginning and an end. Everybody watches the same thing. We're bringing interactive video experiences to the market this year, which means that every single viewer can have a different experience of the video. Do we get out of that uncanny valley that you've talked about? Does that happen this year? And if not this year, what is the time frame for that? When you look at some of these avatars and there's a bit of a creepy feel, you've talked about it. I mean, yours didn't come across that way, but you expect to get out of that uncanny valley this year, or is it further down the line? It's going to be this year. We have some really big models training right now, and I think this is going to be the year where we pass the threshold of that uncanny valley. And the reason that that's very exciting is because every time, what we've seen historically is that every time we increase the quality of the avatars, we unlock more and more use cases. And so a big theme for us the last 12 to 18 months has been that as the avatar quality has increased, people have moved from making a lot of internal-facing content, training, learning, that sort of stuff, to a lot more marketing, customer support, simply because the quality of the avatars gets better. So if you kind of extrapolate from where we are now with better avatar quality, the TAM just massively explodes in the next 12 to 18 months. So what does that mean in terms of how much you're shipping? Can you give us a sense of revenues? Can you give us a sense of targets, growth that you're seeing now this year versus last? So we don't disclose revenue. This has been a fantastic year for us. We've both closed a lot of new logos, new customers, of course. But I think one of the things that investors were very pleased to see when we went out to raise our Series D is the expansion motion, right? So there's a lot of AI companies today that get a lot of initial cash. You signed the first contract, that's awesome. But then the real signal is actually more 12 months later when the customer has to renew their contract, right? And what we've seen the last 2, 3, 4 years really is just that our customers keep expanding their use of Synthesia. They start out with lower contract values. Now some of those are 5, 10, 15 times bigger than they were initially. And that's, of course, a really strong sign of how much people love to use the Synthesia platform and how much value it drives for their business. What is the geographic breakdown in terms of revenues now? It's around 50% North America, which I think is a bit outlier given that we're based here in the UK. Does that become your main market, do you think, longer term, the US? I think the US is the main market for software, but we have a big global presence already. The product works in 140 different languages. This year, we're also expanding with boots on the ground into markets like Japan, probably, Australia. We are a very enterprise-centric company, and we do partner with our customers very closely, which means we also need to be there to help them bring their strategies to life with us actually being there, right, with the human kind of connection. How do you continue to keep a moat with some of the startup competitors like HeyGen? I'm thinking there's a number of competitors now. The moat that you have versus them, how broad and how wide that moat is, and whether or not the likes of OpenAI with Sora, but also Anthropic, Google, whether they essentially eat in to the vertical that you've created. Is that a risk? I mean, competition is always a risk, and of course we look at what's happening, both the bigger players and the smaller players. But I think from where we are now, we've really graduated from being an AI avatar company. That's very much what we were known for 2, 3, or 4 years ago. We are now an AI video platform for the enterprise. We help our customers across the entire process of making video, from the creation with the models all the way to publishing it to their end customers. And so the mode, I think, really is less about the AI models per se. They're very important, but it's actually building a fully fleshed out workflow for video that drives value for our customers. And that goes much deeper than just the models. So I think when you look at the big AI companies, Anthropic, OpenAI, I see them much more as partners than I see them as competitors. we care about dialogue-driven content with human presenters, which is thing we are uniquely good at, and I feel very confident that we'll continue to be the market leader.
You've been stepping up your security credentials as well. So you received security compliance certification, the ISO certification. You've been doing red teaming on the platforms as well. What is behind that push, that focus on security, and does it feel like that's enough?
I'm really proud of how much progress we've made here on the security part. Of course, no system is perfect, and we continuously develop it. It comes from two places. First is a moral imperative that we think is the right thing to do to make sure people don't misuse the platform. But the other part is also what we are seeing is that enterprise companies, they do care about who they partner with. They don't want to work with companies that don't really care about content moderation, where you have people making potentially questionable content, right?
And so you have content moderators as well, and if so, how many?
I don't remember exactly how many content moderators we have. We have, of course, we have automatic systems, and then we have content moderators. And that is definitely an advantage in the market. Like, people want to work with a trusted player. We've just done red teaming with a big American government agency who could not penetrate the platform and managed to actually create any kind of harmful content. So I think all the investments we've made over the last couple of years have really kind of panned out really well and helps cement our position as being the leader.
Just briefly, is the UK meeting the moment on AI?
I'm actually very optimistic with the recent announcements. I think the UK understands that there is a big opportunity to have a seat at the global table for AI, right? Of course, as with anything, we want to see the execution go through, but I think the intentions are there. I'm very happy that Matt Clifford is spearheading a lot of these initiatives. I think he's absolutely great. So I'm very optimistic. I think we have a big shot at becoming a global AI superpower.
Victor Riparbelli, thank you very much indeed. CEO of Synthesia on the back of that $180 million raise, graduating from a Gen AI avatar company to a Gen AI video platform with a global push now, Synthesia. Thank you very much indeed, Victor. Coming up, Donald Trump floats creating a new revenue agency to collect tariffs on foreign imports. We're going to talk trade with Aline Doussin from Hogan Lovells at 6:30 a.m. UK time. That's coming up. This is Bloomberg. Welcome back now to some other stories making the news this Wednesday. Southern California residents exhausted by a week of wildfires, evacuations and blackouts are facing another night of critical fire danger. Returning Santa Ana winds are threatening to fan the flames, with more than 10 million people facing what officials call a particularly dangerous situation. Estimates of the insurance bill keep rising, with Keefe Bruyette and Woods now seeing losses as high as $40 billion. That's double their previous estimate. Boeing delivered the lowest number of jets last year since the pandemic. The US plane maker handed over 348 planes, less than half the tally of its European rival Airbus, and about one-third fewer than the previous year. Boeing has been working to restore confidence after a turbulent year that included a 2-month strike and production curbs following a mid-air door blowout. Meta is set to cut roughly 5% of its staff through performance-based terminations, affecting about 3,600 people worldwide. In an internal note seen by Bloomberg, CEO Mark Zuckerberg says he has decided to raise the bar on performance management. The Instagram owner plans to hire new people to fill their roles later this year. Coming up, staying on tech, Elon Musk being sued by the SEC for allegedly failing to disclose his growing stake in Twitter ahead of that takeover. We bring you the details. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Markets on tenterhooks as traders await inflation prints from both sides of the pond. US CPI expected to remain firm, while the UK outlook has investors on edge. Korea's Yoon is arrested over the martial law fiasco, the first incumbent to be taken into custody in the nation's history. Plus, the SEC's parting shot at Elon Musk as the regulator sues the world's richest man over an alleged failure to disclose his Twitter stake before his takeover. So, European markets, European futures pointing to gains of 0.2%. There is some expectation there'll be a bit of a holding pattern ahead of course, the key inflation prints out of the UK, 7 a.m. in UK time, and then, of course, US inflation later in the day. FTSE 100 futures pointing to gains of 0.2%. S&P futures currently flat. NASDAQ 100 futures pointing to modest gains of around 28 points after ending the session a little softer yesterday. Let's flip the board and look cross-asset. We focus on the US 10-year Treasury. There may be some movement, of course, around Treasuries, how much volatility there will be around the inflation data of today as investors adjust or readjust their views on the Federal Reserve and rate cuts through this year. 477 right now on the 10-year with yields currently down close to 2 basis points. The pound softer again in the session, down 0.1% at 122. Brent trading higher by 0.5%, back above $80 a barrel. And gold is gaining just shy of 0.2%. Now, Yoon has become the first sitting South Korean president to be arrested after investigators launched a dramatic pre-dawn raid on his residence. In a taped address, the impeached president says he's agreed to be questioned over his short-lived martial law declaration.
Today, when I saw them break into the security zone with firefighting equipment, I have decided to accept appearance at the Corruption Investigation Office for high-ranking officials in order to prevent an unsavoury bloodshed, although it is an illegal investigation. However, I do not approve of this investigation by the CIO.
Bloomberg News Seoul Bureau Editor Denny Thomas joins us now. Denny, what is the latest? There were some pretty dramatic pictures in terms of this dawn raid on Yoon's residence. Where do things stand now?
Hey, Tom. So this was unprecedented in Korea's history. Now where we are is that Yoon is undergoing questioning by the investigators, and they have up to 48 hours before if they need more time, they'll have to go back to the court and secure a fresh warrant. They have a lot to go through. Local media reporting, there are 200 pages of questions they need to go through, so it might be that Yoon is held longer. And in that case, the detainment is for up to 20 days. So it's going to be pretty dramatic next few days for Yoon. So that's where we are in terms of the political situation in South Korea.
OK, just walk us through the days ahead then as we look at these pictures, Denny, because the impeachment process continues as well, of course.
That's right. So exactly a month after Yoon was impeached, he was taken into custody. There is a separate constitutional court that is looking into the validity of the impeachment, and that court started the proceedings yesterday, and they have about 6 months before they can come out with a verdict. And if they hold Yoon guilty, then he's removed from the office permanently, and then we will have an election which will have to take place within 60 days. So that's kind of the timeline we are looking at.
OK, Denny, thank you very much indeed. Bloomberg's Seoul Bureau Editor on another dramatic day in that capital. Denny Thomas with the latest. We have some lines crossing right now when it comes to technology and Tencent. Tencent apparently looking to set up a new venture with Ubisoft and the Guillemot family around this that would call and include some of those Ubisoft assets in that new venture. Ubisoft deal may help Tencent expand outside of China. Of course, Tencent already has multiple investments in the US and in Europe, particularly, of course, in the gaming space. Ubisoft is itself a game maker. Tencent Guillemot family, as said to Mull, Ubisoft asset deal. These are the lines crossing, and we have a full write-up on the Bloomberg terminal and on soon, at least, at Bloomberg.com. This is according to sources. They are weighing the Guillemot family and Tencent, creating a new venture that would potentially include Ubisoft's assets. So we watch both of those companies, of course, on the back of this news, and we'll bring you more details as and when we get it. Tencent over in Hong Kong, currently trading up by 1.4%. Staying on technology, the SEC, stateside, suing Elon Musk for allegedly waiting to disclose his acquisition of Twitter shares in order to build his position at lower prices. Musk's lawyer calls the complaint a sham after a multi-year campaign of what he describes as harassment. For more, let's bring in Bloomberg's Bill Ferry's. Bill, I guess the question is, this is a parting shot for the SEC. There will be change, of course, at that organisation in a few days' time after the inauguration, of course, of incoming President Trump. So will anything come of this?
Yeah, it looks like it could be more of a symbolic parting shot. It's too early to know whether there will be real consequences. The crux of the SEC argument here is that Elon Musk passed this 5% ownership threshold of Twitter back in late March 2022, and that he delayed reporting that to the public, to investors. In that time, after he passed the 5% threshold, he continued to accumulate up to $500 million worth of shares in Twitter. And the SEC says had the public, had shareholders known that, the price would have been higher. They would have gotten a better deal for selling their shares. Again, Musk's lawyer is refuting all of this. He said normally in the past, when you have these kind of missed deadlines, the fee is fairly nominal. So it remains to be seen. There is a new SEC chair coming in after the Trump administration takes office. Paul Atkins, he's been traditionally very friendly towards Wall Street and towards big businesses, and has argued against major fines on companies. So it could be a symbolic parting shot. We'll find out in the weeks ahead.
OK, Bloomberg's Bill Ferry's on that SEC decision to target Musk over that holding and the failure to disclose, at least within the proper time frame, that more than 5% stake. Bill, thank you very much indeed. Now, Donald Trump says he will create what he's describing as an external revenue service, ERS, maybe, tasked with collecting tariffs on foreign imports. It's the latest indication that the president-elect aims to carry out his promises for sweeping trade levies when he retakes office next week. Joining me now for some context and analysis around the tariff impact on global trade is Aline, Doussin, partner at Hogan, Lovells. Aline, thanks for waiting by patiently. We also had Bloomberg reporting this week that maybe we might get a phased and moderated implementation of tariffs. There's still a lot of question marks. We don't know exactly what the incoming president's plans will be on tariffs, but we can pretty much assuredly assume that tariffs are coming. What is the global impact? How vulnerable is global trade at this point to some form of tariff regime from Trump?
Thank you for having me, Tom. And I think that's right. We are now sort of pretty clear that increase in tariffs will occur, and we'll know the exact details, hopefully, from next week, pretty early on after the inauguration. I think the impact on global trade, again, will depend on sort of the shape those tariffs will take. There are various proposals that are still on the table. The first one is obviously a universal sort of tariff increase on all trading partners that are trading with the US, and whether sort of the US, if the administration goes for this sort of blanket tariff increase on all its trading partners, the key question will be whether some products that are key for critical US domestic industry will be accepted. The second option is obviously whether those tariff increase will focus on either specific countries, and on that list, obviously, Mexico, Canada, China, but also the EU and potentially the UK are clear targets, or whether they will, those increase will target specific sectors. So I think sort of depending on the shape and of this proposal and the increased amount that we're looking at, what is certain is there will be an impact on global trade. That's pretty clear in terms of sort of the volume of the impact. I think it still remains to be seen, depending on what the president and his team will want to go for.
Yeah, there are all those caveats, aren't there, and the kind of known unknowns around this potential tariff regime. Aline, what is, you talk about Europe, what is the ability for Europe to insulate itself from these incoming tariffs and the retaliatory response that Brussels may be drawing up?
It is going to be tricky for the EU if the US sort of decides to have significant increase, either on specific sort of industry sectors like cars, for instance, or machinery, but also potentially sort of medical device, medicine that are key exports, European exports to the US. But there is as well a big consideration for the EU as to whether, for instance, if the US significantly targets an increase in tariff coming from China, there is a potential diversion risk that the EU will face with increased Chinese imports into the EU customs territory. And I think that's why the EU 10-7 are currently focusing on. The first focus will be potential retaliatory measure against the US if the US moves forward with its sort of increased tariff, but also addressing the potential domestic impact that a surge in Chinese imports will have if indeed sort of there is a rediversion, of trade flow from Europe based on sort of an increased tariff on the US-China side.
One sector that's clearly in focus, and it has been at least under the Biden administration, are semiconductors, and we had further moves on that front in the last week, and today indeed as well, with TSMC and Samsung under pressure from the US to reduce exports of some chips into the Chinese market. And then we have this tiered plan that is put in place, 3 tiers around allies and around adversaries, and then the rest of the world that sits in between. What is the impact ultimately on the chip trade of these measures, Aline?
Yeah, that's very interesting. And just to take a quick step back, I think it's very interesting that it is one of the last measures that the Biden administration is taking just a few days before leaving office. And I think it shows, right, that the US-China trade relationship is not going to change. I mean, we had seen sort of significant unilateral tariff sort of policies being adopted by the Biden administration over the years against China. And you mentioned sort of the AI chip sort of export control rules that just came out yesterday that are clearly sort of falling within that framework. I think it's a very complex of legislation. Trade practitioners like myself are still sort of working out the different tiered approach that the administration has put forward. But clearly, I think the industry and the market is recognizing that they may have significant impact, and they will potentially have significant impact. And I think what is very interesting in sort of the US and its trading partner relationship is whether sort of the new administration will also push key trade allies, the EU and the UK being one of them, in being much more vocal and potentially aggressive on beefing up their trade response to what is considered as the potential national security risk that China creates from a global trade perspective. So there is a lot of moving sort of pieces at the moment.
Yeah, the complexity is there, isn't it? Just briefly on the UK, we had the British Chambers of Commerce chair telling us that he thinks the UK, there's a possibility for the UK to kind of drive a third path in terms of its relationship with China versus the EU and the US. How realistic do you think that is?
I think it is going to be a balancing exercise that potentially is very difficult. And I mean, obviously, sort of the Chancellor's trip in China was subject to high scrutiny politically. But from a legal perspective in the UK, we do have quite a lot of sort of legislative basis that do not potentially prevent Chinese investments into specific critical industry in the UK, but potentially give give UK government the discretionary powers to block those investments. And we have seen just a few weeks ago UK government using that power in a specific set of acquisition that a Chinese investor made into a UK critical industry player in the tech sector. So it is going to be very difficult for the UK to write the fine balance, and potentially the balance of sort of being close to China, encouraging foreign Chinese investment into the UK, but also managing the relationship with the US, which from Monday onwards will be significantly targeting China.
Okay, Aline Doussin, partner at Hogan Lovells, really fantastic expertise and analysis on what is expected in terms of potential impacts to global trade, China, the EU, the US and the UK as well. Plenty more coming up. Stay with us. This is Bloomberg.
Next week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage all next week, only on Bloomberg. Context changes everything.
Welcome back. The EU is said to be considering import restrictions on Russian aluminium and phasing out purchases of liquefied natural gas. The move is part of a new package of sanctions targeting Moscow for its invasion of Ukraine. The draft proposals are still being discussed between member states and could change before they are formally presented. The EU's Foreign Affairs chief says Ukraine's allies should work towards lowering the price cap on Russian oil, meanwhile, to deprive Moscow of revenues. Kallas spoke to Bloomberg's Oliver Crook.
Oil price cap. I have been advocating for this when I was Prime Minister of Estonia, and I'm really pushing for this to be lowered because it has a clear effect. What we see on Russia's side, I mean, they are struggling because their national fund is depleted and they don't get the same revenues that they did from oil and gas. But there's still room that we can use, and definitely the countries need to discuss that. What comes to sanctions, then we are constantly working on new sanctions packages. Of course, we have 27 countries. That means that we all have to agree what we do in this. But we're constantly coming up with new ideas and working on this. On frozen assets, this is something that we have in our hands, and we clearly need to see what kind of next steps we can do. Using the revenues from the frozen assets is a first step, and we need to really discuss what we can do further. Of course, there are also sensitivities on the member state side, but I think it is important to think how we can really help Ukraine in this respect, because it's not right that our taxpayers are paying for the damage that we haven't caused.
That was Kaja Kallas, the EU's High Representative for Foreign Affairs and Security Policy. Coming up, Wall Street earnings season kicks off today. Wells Fargo, Citigroup and JP Morgan all due to report. We're going to preview the bank earnings next. This is Bloomberg. Goldman Sachs, Citigroup, JP Morgan among the Wall Street banks kicking off earnings season today. The five biggest banks expected to post a 15% rise in fourth quarter trading revenue. Let's get more on what to expect with a preview and bring in Bloomberg's Charlie Wells. Charlie, how close to perfection are bank stocks priced ahead of the earnings reports that kick off later today?
Yeah, Tom, it's a big day today, and that question that you ask gets at this really important issue, which is how much of the optimism around mega banks in the United States is already baked into those share prices, which performed exceedingly well over the past year. The KBW Bank Index, which tracks these big banks, is up about 40% from a year ago. How much is of that optimism about rate cuts that we saw over the past year? How much of the optimism about an uptick in M&A, in IPOs, in refinancing, and also optimism about potential deregulation in a new presidential administration in the U.S.? How much is built in? And how much room is there to run for these bank stocks? Any bad news today could put these major U.S. bank stocks under a lot of pressure because expectations have been so high.
Yeah, we can see that reflected, can't we, in the one-year price gains for their stocks. Goldman Sachs up more than 50% over 12 months. What a good run for Goldman, and it could potentially be derailed or reinforced by the earnings that cross from today, of course, going forward. Where are you going to be focused, Charlie, in terms of the numbers?
Yeah, so look, we're really focusing on how investment banking revenue comes in for a lot of these banks. We know that with financing cheaper because of that rate cut in the autumn, there was a bit of an uptick there. I say a bit, but it's actually a pretty big one, up, in the high teens and above at a lot of these banks. Also, there's been so much volatility in the markets. There was a lot in that fourth quarter because of the U.S. election. A lot of these equities trading desks, CFO of Citigroup, Mark Mason, talked about markets revenue up in the high teens there. So we should look at a lot of, revenue from volatility there. And also, I think a really interesting question, too, is going to be net interest income. That is the major source of revenue for these banks. And over the past year, that's been sort of trending downward. But I think there's a question about rates as we go into this new year and what that could mean for those, higher rates tends to be better for that revenue source for these big banks.
What about the guidance for 2025? What do you expect that we may hear from executives on the call and in the analyst notes?
That's what everyone cares about today, right? That's the forward-looking guidance for the year ahead. We've got a very different year coming ahead with the Trump administration. I think there's some key questions. There has been a lot of that optimism I talked about deregulation, but we've also got questions that we've been talking about a lot in the previous few days about inflation, about some of these tariff policies potentially causing higher inflation, meaning rates stay higher. That changes the business mix in which these banks operate and could make a year that a lot of analysts had hoped would be very positive for banks potentially more difficult.
OK. Charlie Wells, as always, excellent in terms of the setup for the earnings season with banks kicking things off later today. Wells Fargo, JP Morgan amongst the mix. Now, Michael Santomassimo, Senior Executive Vice President and CFO of Wells Fargo, will be speaking to Bloomberg later. You can catch that conversation just after 8 o'clock this evening, UK time. Let's set you up with another preview, this time around the data front. It's a massive day, not just for earnings, but of course data that could prove very consequential for these markets. CPI stateside after producer prices surprised to the downside yesterday. CPI in focus today. Bloomberg Economics expects a pretty solid reading on the headline and core, and they expect yields on the US 10-year Treasury to continue to grind higher on the back of this data. Expectations that month on month you're going to see an increase of 0.4% headline for the month of December versus 0.3% in November. Year on year, you're looking at a number of 2.9% versus 2.7%. Those are the estimates. Before we get there, though, it's UK inflation. Let's flip the chart. We know how sensitive UK assets are right now. The focus and the pressure on the Chancellor, Rachel Reeves. Will there be any respite today from the inflation data that drops in about 4 minutes' time, with expectations that you're going to see a year-on-year reading of 2.6% and a month-on-month reading of 0.4%, which would be a pretty big tick-up from the November number of an increase of 0.1%. We'll break that number for you on the opening trade, which is up next. This is Bloomberg.